Good morning, everyone. Here's your Thursday market wrap touching on the US dollar, crude oil, gold, and euro dollar. So let's take a look at what's shaping the markets right now. Starting with the US dollar index, the greenback fell for a fourth straight session, dipping below 98.3 as traders digest fresh speculation about the leadership changes at the Federal Reserve. President Trump announced plans to replace outgoing Fed Governor Adrian Kugler and named four finalists to potentially succeed Chair Jerome Powell. This uncertainty, combined with the weak data, like last week's soft jobs report and this week's flat ISM service reading, has driven expectations for a September rate cut to nearly 90%. And technically, the dollar is still hovering above its rising trend line from late July, finding support near the 98 level. That said, upside has been limited with resistance just under 99 capping recent attempts to rebound. If support gives way, the next major zone to watch is around 97. Moving to WTI crude oil. Prices slipped again on Wednesday, closing near 63.6 a barrel, marking the fifth straight day of losses and a fresh 6-week low. Early gains driven by Trump's new tariff on Indian imports were wiped out as supply worries from OPEC weighed on sentiment. Comments from the US Secretary of State about possible sanctions on Russia added further uncertainty. And from a chart perspective, oil is now firmly below key average, including the 50-day and 89-day moving average, showing the fading momentum. And support around the 63 mark is being tested, while any hope of a rebound would likely require a breakback above the 67 to 68 zone. So turning to gold, the metal finally paused after a 4-day winning streak, slipping as risk appetite returned to equities. But still, the broader backdrop remains supportive for gold, with markets increasingly convinced that the Fed will resume rate cuts in the coming months. And ongoing economic concerns and trade uncertainty are also lending some underlying support. And technically, gold is trading above its 50-day average and key mid-Bollinger levels, suggesting that short-term momentum is still holding. A push above 3380 could reopen a path towards the 3400 and possibly a retest of the highs that seen earlier this year. If the pressure builds, though, initial support sits just above 3300. Lastly, on the euro dollar front, the euro continued its climb and broke above the 1.16 handle, marking a 1-week high. A weak US dollar and Fed leadership speculation have buoyed the pair, while the eurozone awaits retail sales data to gauge consumer demand. The daily chart shows a positive bias, with the pair now above its mid-Bollinger Band and testing higher resistance levels. A sustained move above 1.1650 could open the door to 1.1750 and 1.18 range. Though traders will likely stay cautious until the US policy direction becomes clearer. So to wrap up, uncertainty around Fed leadership and US policy is shaking up the dollar. Crude oils remains under pressure from supply expectations, gold is holding steady on a safe haven interest, and the euro is regaining strength. As always, stay alert because the volatility is likely to remain elevated in the days ahead. So that's all for today's briefing. Stay tuned and we'll catch you in the next update.